Good morning, everybody. Hope you guys are having a fantastic pre-market so far. I really got nothing on watch today. I'm not really seeing much setups that interest me. I think we still need some time. I mean, the SPY and markets are hanging around at the highs here, but I still think that a lot of names need to prove itself before jumping in. So I'm going to take it a little slow today, see what the market brings. But we do have a special guest this morning. I would like to pass it over to Nick Trendle. Morning, Nick.
Hey, just checking you guys can hear me. Hope so.
Yep.
Awesome. I agree with Judah. The past 2, 3 weeks, I have not been getting much traction on the long side, which isn't too surprising with positioning so heavy already on the long side. I use NAAIM data, and once that's over 95%, I tend to be a little bit more cautious with buying breakouts and instead focus on buying shakeouts. And even buying shakeouts like in this market, if you're a day early, like it's been pretty brutal. Um, Overall, I don't think the market is like completely toast. This could just be a higher low, like we saw back in 2024's correction, like 3 weeks down, 2 weeks bounce, week and a half pullback, and then we started rallying. But we are starting to see like mega cap and AI type stocks really come under like more pressure on this right side pullback versus the first wave down. Nasdaq not leading. The S&P 500 is holding up better, and that's usually a sign of like risk off market behavior. And just going back through my watch list, there's a couple names that I'm really focused on. The first being Tesla. I think when you come back from either all cash or majority cash in the market, you really want to focus on the most liquid stocks, because if you can't get traction on the most liquid names in the market, it's going to be really hard to get positioned and get consistent traction on the smaller names like an ONDS, which was showing relative strength but has been very whippy, an EOSE, same kind of thing. So because like the only long position I have right now is LABU, which is acting really well. I am trying to get more exposure into like the large liquid leaders like Tesla. Great relative strength, but still in this market, I am not trying to buy extended. I'm trying to let this come back into the gap zone that we set up yesterday, the 5-day moving average. This is kind of like my preferred entry tactic, is a pullback and a shakeout recapture of the low of a gap zone. And when that also aligns with either a key moving average or like a previous area in the chart, that's a spot that I can execute on. So not chasing Tesla up here, but I think like if you can't get Tesla working in this market, I don't really think it's going to be a market to be very aggressive in. Rivian's also named that it's like, so we talked Tesla, the large liquid leader. I think Rivian large time frame has a very nice large base here that we've been building higher lows, higher lows, higher lows in, but it is that less liquid stock and it's more whippy, obviously, with the price action here. So one that I'm still watching, probably not going to be executing on today, but in that same like idea that it's showing relative strength. We've had like large shakeouts, and then we snap back up to kind of like the breakout point of this 2 year base, but a little wide and loose still. Another stock that I'm focused on today is GEV. I think this is probably one of the cleaner looking stocks in the market right now. We had a 20% pullback in this double bottom base, and multiple times we came into the support gap here right around 540, and we bounced, showing that someone was picking up the bid every time we came into this level. And then we started building additional support gaps like in a stair stepping pattern, which is something that I look for on the right side of a base. Once the news came out that they were doubling their dividend, introducing stock buybacks, we had this nice 15% move out of the base. And from there, I just pulled back to the 5-day moving average. And I really like what it did yesterday, where it gapped up and we didn't even take out the closing price of Friday. We didn't take out the lows. We held the 5-day moving average, and it traded nice and tight throughout the day. So this is one where if we get a little shakeout under the 5-day moving average into the gap zone, that's also a breakout retest. If you look at the left side, right around the 670 area, 673, So that's a spot that I would watch for like a flush and then like a recapture the daily VWAP to get involved and then try to get my stop under the low from Friday. The 10-day moving average would probably catch up to that area as well. So you got like 3 or 4% risk in a name that's breaking out of a double bottom base. Um, and again, if these names aren't working, like Tesla, GEV, you're going to be having a hard time in the market. GH is another stock that I've been stalking. I tried to put it on yesterday and I just didn't get any traction. So again, in a market where I'm not getting traction for multiple days on my trades, if I have a red position going into the close, I will just cut it. But this stock was up, what was it, 28% on earnings, and then had a secondary offering where we gapped down, but we closed above the 10-day moving average every single day after that secondary offering, built higher lows, had the initial rally back up, and many healthcare stocks went through kind of like a 2-week pullback. If you look at Eli Lilly, had a very linear uptrend, linear pullback for 2 weeks. And then we just started kind of getting going here the last 3 or 4 days. So if money is going to rotate back into healthcare after its first after its first move up, XLV, the healthcare ETF, made new 52-week highs, went through that 2-week pullback. This is a name that it's got a couple different areas of interest. You could take it through today's high. I still struggle like with doing that in a weaker market, even though like the group is starting to strengthen up. But to me, like the really A plus entry tactic here is a undercut of the lows of the pullback, $100, like a key round number, a support gap, and kind of like a breakout retest of this level. Whether we get that or not, I'm not sure. But if we can get an undercut and reclaim of that $100 level, that's where I would feel more comfortable sizing up, because that at that point, everyone's probably stopped out of the trade. If it's under the 20-day, it's a weaker market. But that's really where the risk reward skews in your favor if you can get some strength going. Through today's high, I think is viable as well. I would just do so with smaller position sizing because we're in a tougher market, and the better trades in a more volatile market, the better trades are done on an undercut and reclaim versus like a breakout. Let's see. There's one other. PLAB is another name on my radar. Big move up 45%, and then actually had day 2 follow through, which not many stocks have had, up 6%, and then just nice tight price action on Friday. So through the high volume close would be viable as well, and then a stop at Thursday's low. Really like how this was the highest volume in over 3 years. I think it might have been the highest volume ever as well. Looks like it. So whenever there's a highest volume ever move, that's something that immediately goes on top of my watch list, because we've seen like time and time again, well, PL, for example, when a stock has the highest volume ever and then it like consolidates and holds the 5-day on a closing basis, it can make some pretty linear moves. It's usually a little bit better when the market is participating as well, but still, highest volume ever moves and then large liquid leaders are like the two groups that I'm most focused on. And then on the short side, I think Costco has really started its stage 4 downtrend. I've covered this a bunch in my like daily recap videos where we just get lower high, lower high, lower high multiple times. And then I really like on earnings how like it shook out, kind of went nowhere, and then we got the collapse through the low of this base. And it's a slower moving name, but one that like once you start a stage 4 decline, like we had with SFM earlier this year, like it could get pretty linear very quickly and could be just a stock that you put on and then let it work. And it really doesn't take any like mental bandwidth from you. And then the last short that I'm watching today is DoorDash. We've seen a lot of these stocks that lose the 200-day moving average. They rally back up, they uppercut the 200-day, kind of trade around that level. And then once they fail at that level, then you have a really clean area to work with to manage risk. So I'll be looking for just like a loss of the 200-day on this, stop above yesterday's high, previous day's high, and this little resistance gap here. But the idea behind that is what we saw with like a Netflix, where you lose the 200-day, you uppercut, and then you lose it again. This time you actually like gap down, which is even better in those situations. Or a Spotify lost the 200-day, uppercut, and then is now kind of rolling back over. So I don't think there's any like setup where I have to have it today. I would say Tesla is like the main focus, just because it's a large liquid leader holding up great relative strength, and then the weekly and monthly charts on that look phenomenal. But this is a market that I've been punished trying to trade too much on the long side, so my position sizing has just gone lower and lower and lower. And until I can get more than 2 days traction on the long trade, that's how it's going to have to be.
Thank you, Nick. I'll now pass it over to the other Nick.
Yep. Good morning, guys.
Good morning.
First up for me is AVGO, coming up on some pretty key levels here around 330. I'm in no rush to get involved too soon, but I'm looking for a bounce mean reversion type of trade at some point. So I really want to see dips start to absorb and stay above VWAP for me to get involved. So I'll likely be patient with it off the open and wait for it to firm up. IREN, really nice all-day fader yesterday.
Your screen cut out. You got to reshare that.
1 second. Sorry, guys. Back up. Yeah. Next up for me is IREM. Really nice fader yesterday. I'm looking for, continuation, so more of the same today. As long as pops stay heavy under this 37 level from yesterday. NVIS, been a really nice quiet fader and currently sitting on a pretty key level looking left, and nothing I'm interested in chasing down here, but if it stays heavy under this 80 level, then I'd be looking for continuation and a potential gap fill into the low 70s, upper 60s. Rivian next for me. Similar thoughts to what Nick mentioned. It's obviously got some strength in this market, holding up really well. It's been a good trader. I'm interested in dips here, but I'm not interested in giving it too long of a leash. It does tend to get pretty choppy, give back moves. So as long as dips firm up over this, I would say 18-20-ish level, then I'm interested. But otherwise, I'll wait for it to continue to build out a base and consolidate a bit before getting involved. Tesla as well, similar thoughts to Nick. Obviously this has been holding up really well. So I like it for continuation, but definitely not looking to chase it here off the open. I'd want it to kind of prove to me that it wants to continue. So, if we start to firm up over VWAP, reclaim red to green, I'd be interested in dips along a trend. And lastly, I'm watching the quantum basket, mainly Rigetti and IONQ, but I've got QBTS and QUBT as well. And higher the better on all of them. They've been really great daily drivers. So I'll be looking at any pops or swipes that fail to follow throughout the day. And that's what I got. Good luck, guys.
Thank you, Nick and Nick. Thank you, everyone, for tuning in. Hope you guys all have a fantastic